Happy Friday, everyone. So, the day for celebration. It's our final homework assignment of the semester. I'm kind of curious about the mindset that you all are in. Is like, are you in the mindset of just like really excited, or you're just like, there's so much to do between now and the end of the semester that you're just a little overwhelmed? Yeah. I'm right there with you. I'm right there with you. I think I've mentioned that I'm actually on a search committee, and we've compressed what was normally like a 4 month process into like a month. And so I had a morning meeting this morning, and I made a comment about how I'm not a morning person that I know a lot of you in this room are, and kudos to you because I really wish I could be. But I had to get up at 6 o'clock this morning, which is like my own personal hell. And so yeah, it was a rough day today, and I had to do that yesterday as well. So, and I'm gonna have to do it Monday and Tuesday. So, apparently I just really irritated somebody. So, a couple of pieces of items to note. Excel assignments have been graded. Your grades should be posted online. If you have any questions, come talk to me about it. I'm going to go into a little bit more detail and depth on the grading on those after our exam on Friday. So if you have any questions about what the implications are for the final exam and whatnot, hold tight, and I'll kind of let you know when we get to the final. When we get to after the third exam, what the implications are for the final exam. Overall, fairly well done. There were some pretty noticeable, discernible deviations, but overall, everybody followed the instructions pretty well, so I was pretty happy with that. And I didn't get any students who contacted me and said, I can't find my data. So Chaos took that to heart and made sure you found the data and early on. Next week, we have the aforementioned third exam on Wednesday. I know that it's probably not a lot of fun to do preparation for exam on the weekend, but please make sure that you've done some work to prepare for our Q&A session on Monday. Basically, I would like for you to read through the study guide, and it is the longest study guide of the semester because there's 2 whole pages at the very beginning that say, hey, remember all this stuff from the past? It's still here. So you will need to know that, and then we'll have all the new stuff as well. I will not go through it all in every single point in detail, but I will go in your high points. As always, if you have questions about anything, please come prepared to ask the questions. And then complete the practice exam in advance. Everybody's been pretty diligent about that before, so please make sure you do that again. And then we'll have our exam on Wednesday. I am relatively certain that I know for sure that last semester we did not need calculators for the exam. I'm relatively certain that we don't calculators for this exam. It's maintained a fairly straightforward pattern. So you probably will not need a calculator, but bring one just in case I change my mind. You never know. I might wake up over the weekend and say, I really want to do an analytical procedure. So who knows? Who knows? At this point in time, at my age, you can never tell when I'm going to get whimsical. So we'll be doing that on Wednesday. So we got that to look forward to. So let's get started on our final homework discussion. So there's some interesting stuff here. Some of it's not real clear. Some of it is fairly clear and very important. If you hear me griping about something, it's very low likelihood that I'm going to ask you a detailed question on that specific topic area, or at least not to that depth. But if you hear me say, I really like this question, then probably want to make a note of that. Says Dr. Barnes likes that. He's probably going to ask a question about it. Okay. Just those subtle clues that would have helped you all out up until this point in the semester that I'm just letting you know on the last homework assignment. So let's go to 1413. All right, so I apologize for the phrasing here. This is another one of those items that I've sent to McGraw-Hill saying, yeah, the language here is bad. Because it says, which of the following internal controls? And writing there, stop there, you want to note that this implies that everything that's listed below is an internal control, which it isn't. Not every single item listed is an internal control. But assuming that we're going to look for something that is a control and meets the subsequent criteria, that's really important. So which of the following internal controls is most likely to justify a reduction of control risk concerning plant equipment acquisitions? So what does a reduction in control risk imply? It implies that the control, if working, or if put in place and operating effectively, if put in place and it operates effectively, that's basically what we're looking for. We want to make sure that that's the case, that characteristic exists. And if that's the case, then we can reduce our ascribed level of control risk. So go from high to medium or medium to low, whatever it might be. So let's just go ahead and go through the answers. Again, keep in mind that this has to do with property equipment or plant equipment acquisitions. Okay, that term acquisitions is really important. Periodic physical inspection and reconciliation of plant equipment to the detailed accounting records by internal audit staff. So would that be effective control for trying to actually determine that acquisitions are correct, they're valid? Again, just for basically taking one document and matching it to another document, making sure that the items match up. And that seems like a pretty solid control to me. All right. Now, we haven't looked at the other answers. Let's just go ahead and say that makes sense, but let's move on to the other answers. Comparison of current year plant and equipment to account balances with prior year actual balances. So first of all, is this a control? This doesn't sound like a control to me. This doesn't sound like control. That was, in fact, it sounds like an analytical procedure, which kind of disqualifies it in the first place. Secondly, would that actually help us with any information about acquisitions? Probably not. Probably not. So we can toss that out. Review of pre-numbered purchase orders to detect unrecorded trade-ins. All right. So pre-numbered purchase orders. So checking the purchase orders to see if anything was traded in as part of that. Again, we're really focused on acquisitions here. I think this is a control, but I don't think it actually addresses the particular concern we have with respect to making sure that the acquisitions are accurate. Approval of periodic depreciation entries by a supervisor independent of the accounting department. This is definitely a control, but does it deal with acquisitions? Like when you acquire a new piece of equipment, do you say, let me record the depreciation right now? If you're doing it wrong. All right. So if you raised your hand right there, nobody raised their hand, thankfully, but if you raised your hand right there, I'm obligated to send you back to 220. Sorry. You got to repeat the whole process over again. So we're acknowledging that that's not the case. So we're going to say that doesn't make sense. So yeah, we can actually say that A is our answer, and it makes most reasonable sense in that particular situation. All right. Hint, hint. I really like this next question. All right. Property acquisitions that are misclassified as maintenance expense, most likely detected by an internal control system that provides for what? So we're asking for what would be a good control in this area. Now, what do we mean about misclassifications of maintenance expense? Misclassification of maintenance expense. What would that represent to you? So we record something should have been recorded as maintenance expense, instead got what? Recorded as some other expense, or maybe got capitalized as a cost of the asset. So if we're looking at that, we're trying to probably say that if we're looking at that, either we're going to see an inflation in another expense category that we had not expected, or we're going to see an inflation of the cost of property, plant, equipment. Or yeah, so I guess the other way around. Actually, it would be the other way around because they are misclassified as maintenance expense when they should have been either capitalized as the cost of equipment, or they should have been reported as another expense. So instead, those numbers are going to go down and maintenance expense goes up. Can everybody agree with that? I said it wrong the first time, but the second time, can we say that if we agree with that statement? So let's look at the answers and see what would detect an increase in maintenance expense. Investigation of variances within a formal budgeting system. And everybody's going to be like, hey, no, Dr. Barnes, no cost accounting and auditing. We refuse. But let's just ask the question. Would an investigation of variances in this expense category identify what the trend we were looking at earlier? Yeah. If we see maintenance expense as being misstated, that probably would come up in variances. Like say, why does this variance exist? Because you remember back in 221 and probably during cost accounting, but I didn't take it with Dr. Otero, so I can't say for sure. Whenever you see a variance, it's not like, oh, great, favorable, unfavorable, whatever. The whole point is when you see a variance, you investigate it. So that would be the control there. That would be the control. And that seems like the best answer. In fact, that is our answer. I'm so certain of that that I'm not even going to do the rest of the answers. That's my gift to you. Okay. I'm giving you a few minutes back on your day, unless I go to time, which then again, I apologize. Okay, so 1422. Which of the following combinations of procedures would an auditor be most likely to perform to obtain evidence at fixed asset additions? All right. So again, the terminology here really, really important. We're looking at fixed asset additions, trying to validate those numbers. Now, if we're talking about fixed asset additions, what is probably our most likely assertion concern in this area? There's probably a few that are relevant here. I would say VAA was probably a concern. Do we think that's our primary concern with respect to fixed asset additions? No, it's probably not. What is it going to be? Existence occurrence. Yes, existence occurrence. Again, because it's an asset, it's a very high dollar asset. I want to make sure they exist. So that's going to be a really, really piece of key information in order to understand it. So what do we do? Inspection of documents and physical examination of assets. Would that give us evidence about existence occurrence? What do you think about that? I really like that answer. Let's hold on to that one. Let's look at the rest. Recomputing calculations and obtaining written manners representation. So if we're assuming that existence occurrence is our key area, recomputing calculations doesn't give us any detail about that. That's a BAA test. And obtaining written manners representations, well, imagine we could be creating fraud and we could say, hey, does this asset exist? And say, oh, absolutely, absolutely it exists. Like, is that as valid as going and looking at the asset to see, oh, the asset's in place there? Observing operating activities, comparing balances to prior period balances. Again, prior period balances are completely irrelevant with respect to additions. They just tell us what was in place previously. And so observing operating activities might give us a little bit of insight in here, but again, it's not as strong a test as what we looked at in A. Confirming ownership and corroborating transactions through inquiries of personnel. All right, so confirming ownership, that's probably going to be more about rights and obligations rather than existence. And the corroborating transactions through inquiries can give us some small insight, but again, a less strong test than we're looking at in A. So A seems to be our clear answer, especially about process elimination of the other answer. All right, moving on to chapter 15. Got a little bit of chapter 15 to talk about. An auditor's primary purpose in examining a letter received from the bank shortly after the balance sheet date that renews and extends an entity's notes payable, most likely to obtain evidence concerning management's assertion about what? This one was an interesting question. It's not one that we specifically discussed, and I wanted you to try to expand your thought and your horizons on this one, okay? I want you to always be thinking. So let's think about what would the purpose be of renewing and extending a note payable. So what do we know about notes? Notes payable, first of all. What type of category of account are they? So we got 5 different account types. Asset, liability. Stop me when I stop. I'm not going to get for the right one. Asset, liability. That one. Okay, a liability. Any specific type of liability that we'd say this is associated with? Is it a current liability, a long-term liability, a made-up liability, a tangible liability? What do you got here? It's a long-term liability, okay? Except in one situation. What would be the situation where a note would not be treated as a long-term liability? Right, if it's due within the next year. So what is this saying? It's saying we are extending this out because we don't want this to become a current liability. We want this to remain a long-term liability in the books. Does everybody understand why I was going down the primrose path here? All right, trying to get you all to this point. So we're actually saying this is still properly categorized as a note payable, not an immediate current payable because it's going to be due within the next 12 months. So we've alluded to this a couple of times already in this course. What does it mean when we're trying to verify the categorization of a particular account? What is another word for categorization? Classification. And by association, we also know that we need to have that information properly presented in the financial statements. So presentation, cutoff, and disclosure classification. And cutoff would be kind of an ancillary association. I honestly do not like the way they've got this set up. This used to just be answered presentation and disclosure in the classification. I think somebody got here and they said, oh, we're just going to toss cutoff in the middle, and they didn't realize it should have been presentation and disclosure, comma, cutoff, comma, classification, not presentation, cutoff, and disclosure classification. Because remember, presentation is more, disclosure is more associated with presentation than with the other categories. So ignoring the wording, the bad wording by the publisher, this is an interesting question to explore. And if you ignore the wording, then it gives you a little bit of food for thought. 1519. An auditor compares the current year revenues and expenses with those of prior year and investigates all changes exceeding 5%. Doing a lot of variance stuff. Great. It's like remembering all those things back from cost accounting. You get to harken back to those good old days. Is anybody not taking cost accounting yet? My joke's just going over everybody's head and just like saying, what are you talking about? It sounds like 221 vaguely. So I'm assuming most everybody has, but I do know it's possible to take this course without taking cost accounting. Okay. All right. So good. Be really sad if you didn't get my jokes. Actually, I wouldn't be sad, just laugh with it anyway. By performing this procedure, the auditor would be most likely to learn that what? All right, so we're trying to look at variances in revenues and expenses and identify if something has come up. So I want to look at the first 2 answers. I'm going to ignore the last 2. I'm going to tell you A, C, and D are not correct, but I want to look at the first 2. So fourth quarter payroll taxes in the current year were not paid. All right, so items, the payroll taxes in the current year were not paid. When looking at variances in revenues and expenses, identify that. So what does that say? Does it say that payroll taxes in the current year were not recognized, or does it say that they were not paid? Oh, you see the problem there. See the problem there. The wording is really tricky. By the way, the AICPA says it never tries to ask questions that trick you. And then I see questions like this in the publisher's textbook, and I said, that's BS. Yeah, this is definitely a trick question, but I do think it's a good question to think about this. So what would the journal entry look like if they were recognized but not paid? You'd say you have a payable that you have to recognize, so like credit to a payable and then an expense to a debit to an expense. So we still have the expense being recognized, even if they haven't been paid. They're going to be paid subsequent, which would reverse the payable. So that's not our answer because that doesn't have an effect on the expense difference. But let's look at B. Entity changes capitalization policy for small tools during the current year. So we just talked about capitalization. Usually when we talk about these items are either capitalized as a cost of an asset or they're going to be expensed. So if they change that policy, will that affect the amount of expenses being recognized? Yes. Okay. Now, if you're shaking your head and you're just kind of like saying, I answered A and Dr. Barnes tricked me on that one, how dare he? First of all, it's unlikely I asked this nuanced question on the exam. Secondly, you're one of many of hundreds of students that I've had that's fallen for that trap, okay? I think it's an interesting question to talk about, and I don't think if you should feel ashamed, it's more about thinking about the question and seeing why is the answer wrong and understanding it moving forward. So that's my point in that. It's not to make you feel silly or foolish. I'm the only one who gets to feel silly or foolish around here. Okay, before we answer these next questions in chapter 16, what I would like to do is I would like to look at some of these titles, okay? So we have a bank transfer schedule, and we have something that says date dispersed per and date deposited per. Now, this is really, really critical to answering these questions, and it actually makes the answering of the questions very simple, okay? What do we call it when a bank makes a disbursement? What is that type of transaction colloquially referred to as? They say it's EFT, Dr. Barnes, electronic funds transfer. It's like, okay, let's go back to the 90s and 2000s when I was king, all right? What would that be referred to back in the 90s? A payment made by a bank on behalf of the person who wants to make the payment. A check, yes, very good. That's what we're going for. Yeah, checks being traded. I know that most people don't write checks now, but again, think about those types of transfers, okay? So we're assuming that these disbursements are checks. Everybody with me? Okay. And this one's a little bit more straightforward. If we're talking about a deposit made to a bank, that's referred to as a deposit. Can we agree to that one? That one's a little bit more straightforward. So then we go to 1612. The tick mark diamonds most likely indicates the amount that was agreed to what? So this is listed under these date dispersed per, which we refer to as checks, okay? So it probably has something to do with checks. Does everybody see why this is a much easier process once you actually can get the categorization down? So outstanding checklist of the applicable bank reconciliation. So this is going to give us the information of any outstanding checks that are in place. That's why this is listed here. So that's what we're looking at there for the diamond. And then the triangle tick mark basically says we're looking at deposits in transit, items that were deposited and when they're going to be hitting that bank. So again, this is transfers between banks, which is why they're kind of a little bit of a difference, but the terminology has not changed for us. It's basically looking at outstanding checks and deposits in transit. And yeah, that's all there really is to it. 1615. The primary evidence regarding year-end bank balances is documented in the what? Now, if you think that I'm just going to let you off by answering this question, no, okay? We're going to have to go into a little bit more detail, all right? Let's go into more detail. So we're going to do a full review of the bank reconciliation process, how we test the bank reconciliation. So what is the very first document we need to test the bank reconciliation? Bank reconciliation. I could have been really, really foolish and say, yeah, the bank reconciliation. What's the first document we need? And we could have gone down that road for a while, but I'm not feeling it today. All right. So if we're talking about bank reconciliation, what line are we trying to prove in the bank reconciliation? What is the ultimate item that we're trying to say? This is what we're trying to prove is correct. The book balance. The book balance is what we're trying to get to. The book balance at the very end, okay? And then we've got all the items that are listed. We've got at the top is bank balance, and then we've got all the reconciling items in the middle, which would be checks, deposits, and all the adjustments, okay? So we need to determine that book balance, and the way we're going to do that is to validate the bank balance and then validate all the items in the middle. So the second document we need validates the bank balance, which is, by the way, the answer to this question. What is going to be that item that we need? Standard bank confirmation and accompanying reconciliation, but that's pretty boilerplate. So standard bank confirmation is basically our primary evidence there. That tells us what the balance is at the reconciliation date. Now, third item, we need to prove all of those adjustments that are occurring in the middle. Remember we talked about, if given enough time, those adjustments will eventually clear out. All right, those checks will clear, the deposits will hit the bank, those charges will eventually be recognized by either the bank or by the client, whatever it might be. How do we validate that those are legitimate transactions? What is it that we request? What was that document called? The cutoff bank schedule. Yes, cutoff bank statement, or cutoff bank statement, not bank schedule. Cutoff bank statement. Basically 7 to 10 days after. Okay. All right. Just as a refresher, let's see how on your toes you all are today. Okay. So I told you that if we had to extend our testing, there were 3 additional tests that we could perform. And I said, you don't need to know what they are, but you have to remember their names. So does anybody remember one of them? What's that?
Lead schedule, cash lead schedule.
What's one of the documents that we've used for it, but that's not one of the tests. So we had extended bank reconciliation procedures, which is basically looking at bank reconciliation over a period of time rather than a point in time. Then we had proof of cash, very good, okay. And then we had the one that I said is probably not relevant anymore because we don't do a lot of testing via checks. It's a really, really weird. It also shares a name with Mary Poppins. Hiding, yes, that's right. I don't know where I was going with that. Let's go fly a kite. Anyway, yeah. Does anybody still watch Mary Poppins? It's like a tiny movie. No. You know what I'm referring to, right? Okay, that's your assignment for the weekend. Everybody watch Mary Poppins. Now, no relevance to auditing, but I don't want my joke to fall flat. All right. Anyway. Yeah. So that's what items to know. So again, 3 items: bank reconciliation, standard bank confirmation, cutoff bank statement, and then you need to know what the purposes of all those are, and then we need to know the names, extended bank reconciliation procedures, proof of cash, test for kiting. Those are all things that we can do if we need to expand our testing because we suspect fraud. 1619. An auditor testing long-term investments would ordinarily use substantive analytic procedures to ascertain the reasonableness of the what? Ooh, this is a great question. I love this question. All right. So we've got a whole bunch of assertions listed here. Which assertions can we test with substantive analytical procedures? Dr. Barnes, you asked us that like months ago. We can't possibly remember that. I said you had to remember all this stuff. So what's the obvious one? It starts with the letter V. VAA. 90% of our scenarios we're going to be talking about VA. And look, valuation is listed up here. Okay, so that must be the answer, right? So fast. What did I say the other one was that was used like maybe 5 to 10% of the time? Is this the opposite one? Completeness, yes, completeness, yeah. It's really directionally dependent. So you're on the right track there. Completeness, okay? So it's going to be completeness or valuation, allocation, accuracy. We can't determine classification or existence of that. So it's either B or D. So it's probably D, right? Because valuation most of the time. So valuation of marketable equity securities. Do we as auditors care what the market valuation of equity securities is? No, we only care about what the classification is from the purposes of the point of view of the cost to the cost of the individual, the cost of the entity. That's what I'm trying to get to. So we're not concerned about valuation of how their marketability. But can we test completeness of recorded investment income using an analytical procedure? Yes, we can, and that is a very valid test of a analytical procedure in this regard. This is going to be our answer. So this is going to be those 1 out of 10 times where completeness is going to be the assertion that we're concerned about, making sure that this income got reported. So something to note there. One of those rare situations we're going to see completeness instead of valuation. Now, again, you may ask, Dr. Martins, would you ask this question on the exam? The answer is probably not. I'd probably ask you which of the assertions that are most relevant to substantive analytic procedures. I don't know that I drilled down so detailed, but I do think it's important to remind you so of that. All right, last multiple choice question of the semester. To establish the existence and rights of a long-term investment in the common stock of a publicly traded company, auditor ordinarily performs a security count or does what? All right, so security count is basically going to be looking at physical inspection of those particular documents. But let's assume that we can't perform a physical inspection. What would be a primary reason why we couldn't perform a physical inspection? That's actually a pretty good reason, but I would assume that they're still, even because they're intangible, they still have some evidence associated with them. But you're probably right there. Assuming that we ignore the fact that they are ephemeral items that we only assign value to because we're human beings. Do we have some sort of proof that they exist? Like if you own a piece of stock, do you have some sort of evidence of that? Yeah, you have a stock certificate associated with that. So if assuming that a stock certificate exists somewhere, what would be a reason why we would not be able to do a social security account? Our client doesn't physically possess those stock certificates. Okay, so somebody somewhere possesses them. A third party probably possesses them. So we would want to perform a third party request, which is also called a confirmation. Yes. Okay. Now, those are really important to note. Now, you may say that there's two possibilities in here if we get answered, because two of them have answers for confirmation. The book answers that confirms the number of shares that are held by an independent custodian. The second one says confirm the number of shares owned with the issuing company. B is really reasonably given as the answer because it actually specifies that these are being held by an independent custodian. The reason D is not our correct answer is because it verifies what was purchased, but doesn't necessarily verify that they are still being held or owned by the client. It just says this is what they originally purchased. It doesn't actually have any subsequent transactions. So you did have to drill down a little bit deeper. That being said, I will promise you 100%, I would not ask you a question like this on the exam. I would ask you to prove confirmation or prove physical examination. I wouldn't drill down to the minutia saying, oh, well, you have to also prove ownership. So, but that is kind of irrelevant when we talk about rights of a long-term investment. So we'd actually prove that as well. All right. This next question I'm not happy with. I'm gonna be totally frank. I've not found a good question to substitute with it, but I do want to talk a little bit about this. This is one of those common questions where we say, here are the audit procedures, here are the assertions. We only have 3 assertions that are listed here. So rights and obligations, existence, evaluation, allocation, accuracy. Now, I want to make a note. So when we talk about this, we're talking about existence. We're talking about the property equipment that represent assets that actually exist at the balance sheet date. So the balance sheet date is at the end of the audit period, the period under audit. So December 31st, 2005, we're testing the year 2025. Those items actually exist as of that date. So that's basically the ending balance of whatever's in the financial statements. Now, why am I insistent upon that? Because that's going to provide some direction for us in the rest of our testing. So what I'd like to do is I'd like to go through these audit procedures one by one and see if we can identify which assertions they relate to, right? And this is going to give us a little bit more detailed guidance here as to what we need to be looking for. So the first one says trace opening balances in the summary schedules to the prior year's audit working papers. So first of all, is trace used correctly here? No, it's absolutely not used correctly here, and it makes me mad. So first of all, it's not used correctly. It's actually, this would be a vouching test. Even if we try to say the word vouch, I have a hard time buying into the term vouching here because they're trying to use these prior year's audit working papers as source documentation for an audit. Now, can we actually say prior year working papers provide some evidence? Yes, and this is really critical, but I would not consider this to be a valid form of testing. I think this is just kind of providing a basis for what our actual testing would be. Because remember, we're talking about fixed assets. We're trying to determine what the ending balance is. And we do that by validating the beginning balance and then looking at the additions and disposals during the period. So this is just kind of validating the beginning balance. So if it's going to actually say that the assertion is very loosely, extremely loosely going to be existence occurrence. Even then, that's really suspect. And the problem is even if we say that's existence occurrence, it validates the beginning balance, not the ending balance that we're concerned about right here. So does everybody understand why I'm harping on this so hard? It's really, really challenging because you say, okay, well, it's obviously it's not going to be valid because it's trace and that's completeness. Well, it's not completeness, but it's still not the correct answer. View the provision for depreciation expense and determine the depreciable lives and methods used in the current year that are consistent with those used in the prior year. Now, this one's easy. This one should be easy with respect to assertions. We're talking about calculate depreciation expense and determine depreciable lives and methods are consistent with those. These are a lot of math items, so it's going to be BAA. All right. Determine the responsibility for maintaining the property equipment records is segregated from the responsibility for custody and equipment. All right. So basically, we're talking about a segregation of duties responsibility. So this could actually represent multiple assertions. with respect to this. So we're talking possibly about completeness, but we could also be talking about existence occurrence. We don't actually know what direction. They don't apply a direction to this control, or sorry, to the control, the testing of the control. But we can actually say that it might be valid for both of those. I do want to put a note in there that this could be possibly an answer to B, but again, I don't think that's the case because I think this is more about an authorization function rather than the validating the beginning balances are correct, or the ending balances are correct. Having title deeds or deeds and title insurance certificates. This one's a little bit easier. What is the purpose of looking at deed? So we talked about this a little bit earlier. So we talked about, have you ever bought a car? And some people said, I bought a car. It says, how do you determine that you own the car? It says, well, I've got the deed right here, which I don't get to say that for my car because somehow I lost the deed. I don't know what happened. But yeah, so anybody can actually own my car right now if they really want it. Don't steal my keys, please. I need a ride home. All right. So yeah, that's how you actually prove that. So what's another term for ownership? Rights and obligations. Rights and obligations. Good. All right. Perform cutoff tests to verify that property and equipment additions are recorded in the proper period. Well, it says cutoff, so I think we're going to assume that's cutoff right there. All right. Determine the property and equipment are adequately insured. This is going to be another one that's either completeness or existence occurrence, depending on the direction we move, but this is specifically relevant to insurance, not to the assets themselves. All right. Physically examine all major property and equipment additions. This one's great. Okay. This one gives us clear evidence because this is saying we are physically looking at those items to make sure that they, what's the word I'm looking for? Exist, okay? Is there any completeness nuance in here? No, okay? We can't test completeness through a physical examination of equipment. So this is only existence, which there's a reason why I'm emphasizing that because that's going to be a very, very important answer. All right, so verify the entity of legal rights of property and equipment acquired during the year. So that's rights and obligations. We only had one that was rights and obligations. That was number 4. Okay, that was number 4. Then verify the recorded property and equipment represents assets that actually exist at the balance sheet date. This is existence. Now, it's important to know we had multiple ones that could be relating to existence occurrence, but there was really not enough information to determine all of them which direction we were moving. We did have one that was only existence occurrence. Now, ask yourself if you want to verify whether or not items exist at the balance sheet date, the end of the period. Is there any better test than going and marching out and saying, "Huh, look at that, it's right there"? That's a pretty good, strong test to me. That's a really high reliability test. So I think this is going to be our best bet. Now, am I saying that other tests might not be valid? I think we can make an argument that 3 could be a representation of an exam or representation of that, but it's not for the most part. It's not going to be as strong as number 7. And this is again explicitly a test of controls in this area, which is another reason why I'd be a little bit suspect about using that. Verify net property equipment are properly valued at the balance sheet dates. So that's a VAA test, and we only had one that was VAA. That's going to be number 2. Okay. All right. Everybody enjoy going back and doing an analytical procedure again? Just like memories. Like, does anybody just like do this analytical procedure? It's just I remember back then I was young and naive. Yeah. Now I'm experienced and I know the way the world operates, and I'm a little bit less naive, but also a little bit sadder about my life. Yeah, that's they say ignorance is bliss, and you no longer, so I guess you no longer blissful. Man, sorry guys. All right. So what do we have to do for this? So we're doing the same exact procedure we did before. We're going to try to calculate an average balance, and then we're going to multiply that by what our average interest rate is. And it says the annual rate for interest is 6%. So there's no calculation involved here. It's just 6%. So what do we calculate? What was the average balance for the period? Anybody calculate that out? So we add it together, it's $915,000. Then we divide by 12, we get $76,250. Okay, see some nodding head. So apparently I'm down the right track. I've not lost my mind yet. All right. So $76,250, multiply that by 6%. And we come up with $4,557 or $4,575 is our expectation for the interest expense. They recorded $2,000. Now, is that close enough to accept? That's always the answer we answer when doing questions like this. It depends. What does it depend on? Material. Well, so yeah, material. How do we just evaluate materiality from perspective of analytical procedure? What does that measure called? Tolerable difference. Tolerable difference. Okay. So we calculate the tolerable difference. We are to calculate the recorded amount, 5% of the recorded amount. Okay. So 5% of the recorded amount is like something like 5% of $2,000. Wow, it's like $100. So they had to be within $100 of $2,000. They said 4,575. Not even remotely close. Okay, not even remotely close. We could eyeball that and kind of come up with that answer, but we do have to still go through the process and do the calculation. So it's not within $100, way more than $100 off. We do project that. So just for context, doing the analytic procedure itself was enough for Chapter 5, but what does this mean for us as far as the audit implications? You just performed an analytic procedure on interest expense. Your expectation was substantially higher than what the client recorded. Now, I know it's a small amount. You may say, well, Dr. Barnes, it's just $2,500. You know, what harm could there be? It really depends on the size of the client. If we're talking about a smaller client, that could be a material amount. It could be a material difference. So if we say it's just off, we say, okay, we can't accept it. All right, testing done. Thanks. Ready? You can go home for the day. Is that what our final implication is? Or does this mean that we have to expand the scope of our substantive procedures in this area? Yeah, we have to say, look, what you recorded was not sufficient according to our estimation. So we need to understand why you didn't record a larger amount here. We're not saying that you're wrong, but we just need to have more transparency. We need to have more visibility and understanding of these transactions. So we would start testing the transactions individually to understand, were there transactions for interest expense that did not get recorded? Did they get capitalized? What was the reason behind that? So the real implication of this one is not just could you do an analytic procedure, but can you also determine what are the further implications of this analytic procedure if it fails? The answer is it expands our testing further on, and we need to understand what are the types of tests we perform in the substantive procedures in this area. Everybody get that? Okay. If I asked an exam question on that, could everybody articulate that effectively? It's good. I'm not sure I could. So yeah. Just kidding. Really quiet today. You guys are letting me ramble way too much. My brain, I start yelling internal control at the top of my lungs or something. Problem is, Dr. Demir's class is right before this one, so I can't interrupt his class for this one. Okay. I don't know. There's some other instructors down the hall, and they haven't informed me that I'm too loud. Then again, you guys don't get my dander up that much, so I don't really have reason to yell at you. So it's just the graduate students that get under my skin. Okay. You know any of my graduate students, you understand why. Okay. Okay. So Focus CPA has been engaged to audit the financial statements of Vernon Distributors Incorporated. It's gracious. It's fortunately one of the few times it's finished up. Okay, so hold on. All right, so continuing audit client. I'm gonna have to read from this because yeah. Continuing audit client for the year September 30th. Obtaining understanding of Vernon's internal control system fund set control risks from the maximum level of financial statement client assertions regarding investments. Fund determined that Vernon is unable to exercise significant influence on investing in non-related parties. They obtained Vernon detailed analysis of investments as securities showing several items. Okay. So ignoring this here, which is really awkward placement, we have to go down to the rest of the items. It said it prepared the following audit program for substantive analytic procedures, or substantive audit procedures. So let's just go ahead and go through the first few, and then we're going to talk about the rest. So float and cross-float analysis, what is that? Adding numbers together to make sure they match up. Okay, so the numbers add up. So float is vertical, cross-float horizontal. Traces September 30th balance of the general ledger of the financial statements. Now, again, this is not really tracing in the context of tracing. This is just mostly saying read these numbers and make sure that their source items are correct. If anything, I would say it's vouching because we're like looking at the September 30 balances and moving back to the original source items. But it's actually, I would argue it's more agreeing than anything. I think I just said vouching, but I think it's more agreeing. Then trace the beginning balances of the prior year's working papers. Again, it's not really a tracing test. It's more just an agreement test. The good news is these aren't really tests for the procedures or context of working papers or for audit documentation. These are more just validation tests. What are going to be procedures are going to be the rest. So obtain positive confirmation of the investments held by any independent custodian as of the balance sheet date. Now, your responsibility here was to identify which assertions would be most relevant for this particular test. So the financial statements relative to the investments that would be addressed by each procedure. So positive confirmation of the investments held by independent custodian. What would be our primary assertion in this regard? What would be the assertion we test with this procedure? There's multiples of them because we talked about confirmations can test multiple assertions simultaneously. But what would be the most important, the reason that we perform this procedure? Take a guess. I'll start. Existence occurrence. Yes, very good, very good. I was going to start eliminating some if they would ask. Authorization is definitely not the one. Existence occurrence. Yeah, existence occurrence is the one we talked about. That would be the main reason. So number 5, determine that income investments have been properly recorded or accrued or collected by reference to published sources by computation or by tracing to recorded amounts. Now, ignoring the word tracing, because that's not properly used in this context, what does this sound like to you all? So the key here is to understand, because you're going to be looking at items and you say, well, it looks like a lot of numbers, Dr. Barton, so it's probably VAA. But is that what's being done here? Is this actually doing computations, or is it saying that items have been properly recorded? That the items that are recorded are items that should have been recorded actually did get recorded. Now, if we're saying that, if something needs to be recorded, what would be our primary assertion in that regard? Completeness, yes, completeness. Okay, that word properly recorded is the case. Okay, and tracing recorded amounts. Yes, we could argue that tracing is used correctly there. I still don't like them using this in that context, but you know, the most important terminology here is properly recorded. Understanding that if we're talking about items getting recorded, that's the case. That would be the key there. For investments in non-public entities, compare carrying value to information in most recently available audited financial statements. So we're doing a comparison. We're trying to make sure that we look and see what the carrying value is and carrying value and what it is in the current audit financial statement. So we're agreeing two items together to make sure that the numbers match. Now, we talked about this on Wednesday. We said if we're agreeing two documents together, what does a comparison usually test, especially if we're comparing numbers? Give me a hint. It's one of the 3 big assertions, but it's not the 2 we've already talked about. VAA, valuation, allocation, accuracy. All right, number 7. This one's a doozy. Determine that all transfers among held to maturity, trading, and available securities have been properly authorized and recorded. So this one's an important one to note. I think there's one primary assertion that's being tested, but some other assertions that you can make arguments for. So the big clue when they say held to maturity, trading, and available for sale securities. It sounds like different categories of securities. So what would that represent? Classification, yes. Now, if they're need to be properly authorized and recorded, we probably want to all make sure there's an argument for presentation and disclosure. We also want to make an argument for completeness, and even to some degree VAA if we're talking about recorded or properly recorded amounts. But classification is the one that I would say is the clarion call. If I ask you to give one of the assertions, that would be the one I think you would go to. Okay. The good news is if I ask this question on the exam, you basically can just like throw a dart at an assertion. As long as you just gave me an assertion, it'd probably be correct. Which probably means that I'm not going to give you this particular question. Number 8, determine that any other than temporary decline in the price of the investment has been properly recorded. All right, so we're talking about investments. We know that certain investments have to be marked to market value. Okay, so if we're going to be marking these items to market value, they need to be recorded properly and make sure they get recorded at the correct amount. So if we're doing computations in this regard, this is probably a reflection of which assertion? Computation being the key word there. Yeah. VAA, yes, VAA. Very good. All right. Audit of cash. Okay, so you all had to do a few things. I think I told you just to submit this work paper right here and then also a summary of any issues that you noted. Was that correct? Just the last one. Okay, the last one. Okay, I couldn't remember which one. Get out of the way. So with me. And now it's not moving over. Okay, great. Well, we'll move over manually here. So let's just go ahead and talk really quickly about what's going on here. So we've got some work papers here. Some of these are pretty straightforward. Some of these are a little bit more nuanced because you had to do some digging. Overall, I think this is a good reflection, particularly the beginning parts of this assignment, kind of show you what would be the testing that we would do as auditors. So here we have the bank reconciliation. This is our primary document for testing. We have to have the bank reconciliation to make sure this works. What would be the items that we would need to make sure that we test the bank reconciliation again? Assuming that our bank reconciliation is our first document, what is our second item that we need? Standard bank confirmation. Okay, we're just going to validate this item up here. So I'm just going to go ahead and put in, what is going on here? Why is my not able to do the drop downs? Okay. Closing out. I promise I'm not getting old and not able to run an Excel spreadsheet anymore. That day comes that I'm in trouble because I use the spreadsheets all the time. Not now. Okay, let's try this again. Hooray, it works. Okay. So we look down here, we look at our tick marks, and it says trace to the balance of the bank confirmation. Now, I don't like the word trace here, that's an agreement, but otherwise it's correct. So we're gonna put the oops, C, not diamond, C. Okay. But we're gonna come back to this because this is really important. Now, we also have to validate all this information over here. Now, what did we say these items were in the middle that we try to use to verify those items are properly recognized, properly acknowledged? So all the adjusting items in the middle, what was that document that we looked at? Cutoff bank statement. So we got some diamonds here we can put up here. All right. Now, there are a couple things I want to point out here. So first of all, you will notice that we did not specifically refer to the cutoff bank statement here, but if you look at the tick mark, it said they examined the canceled check and the wire transfer authorization for proper pay amount and endorsement. So could we have used the cutoff bank statement here? The answer is absolutely yes. But this is reflecting the fact that we actually had more substantial proof with respect to these transactions. We looked at the exact check itself as after it got paid and was canceled, or we looked at the authorization of the wire transfer. So we looked at the individual transactions themselves rather than a source document that listed out these transactions. That's why they use a separate tick mark. If I ask you this question on the exam, ask you to do an audit of the working paper, or the bank reconciliation, you could either put down this tick mark, or if you just put the cutoff bank statement out, that would be fine as well, depending on how you tested the transaction. So it just really depends on what is the source documentation that we can look at for test. Both of those are valid forms of evidence. Second item I want to look at is I want to look at this right here. So it said that this ties to a different work paper. This is going to be our standard bank confirmation. So 16-3 was referred to, which fortunately we have 16-3 here. If we look over here, we can see that we have a balance of $3,705,473, which is this number right up here. So if I do this reference over here, can I put a similar reference over here back to the original document? Can I say that's 16-2? Yes. So now I've got one document referring to the previous document, and then the previous document referring to the subsequent document. From a documentation standpoint, what is that called? Something we talked about with respect to the elements of documentation that are really important. So we had headers, we had indexing, we had cross-referencing. Yes, this is a cross-reference. So showing here's where we got the evidence originally from, here's where it ties back to. So this is an example of a cross-reference, and that happens quite frequently in this particular series of documents. All right, last thing I really want to talk about, we can go into a little bit more depth on this. This is pretty straightforward, but there was a little bit of an issue here. So I'm going to go ahead and highlight the legend here. It says we're vouching amounts to the bank reconciliation, which basically is trying to say, here's our cutoff bank statement. And we're trying to make sure that all the items that were listed there are in present, okay? So this deposit, this check, another deposit, all these items are listed, and that's what the triangle symbol means, or the delta symbol, okay? But I left this one over here, the December bank charges. Why is this not got a document or a symbol next to it? The bank reconciliation doesn't have it up here. Should it have been in the bank reconciliation? Yes, and this is an item that we would want to make a note of as auditors. Want to make a note saying, yeah, this is not present here. Now, the rest of everything else, first of all, I'm going to tell you right now, everything else is going to be an example of extended bank reconciliation procedures. So you wouldn't have to do any further testing. But I want to go to the final tab just to kind of validate what it is that you should have been looking for. Oh my gosh. Killing me. I'm running out of time too. Yeah, there's evaluation. Okay. So it says the assertions that are substantiated by testing procedure. A lot of these reference to agreement, and even the ones that say tracing are going to use the word agreement according to my terminology. So what should have been the primary assertion that you all should have been looking for on this particular bank reconciliation? Using the word agree in all these contexts. Start to the letter B. VAA would be testing there. Now, can you test other assertions simultaneously? Yes, but the most important goal here of this test is actually make sure that the valuation is recognized by the organization is consistent with what's recognized by the bank and all the documentation matches up correctly. All right, best of luck in your studies. I will see you all on Monday.